You don't know what that number is unless you're tracking the time. What doesn't get tracked doesn't get fixed. Payroll is the main thing. That's the one that creates the most amount of pressure.
Hello, Architect Nation, and welcome back. This is the right place for you if you run a small architectural practice. On today's episode, you'll discover the single biggest mistake architects make that silently bleeds profits. No one talks about this, but you'll recognize it instantly. Why treating every project like a mini business might be the smartest way to scale and the metrics to prove it. And how one financial strategist is helping architecture firms break free from the feast-famine cycle with nothing but a spreadsheet and a strategy. So in today's episode, I was privileged to sit down with the mighty Mike Linn, a licensed CPA with over 2 decades of experience in public accounting and bookkeeping. And after running his own successful tax and accounting firm, Mike now brings his deep expertise in generally applied accounting principles and tax compliance to the business of architecture team. And we're very proud of him here and the work that he does with our clients.
And now a word from today's sponsor. Can't find the product data you're looking for? You might be using the wrong search engine. Broad searches result in consumer products, out-of-date information, and websites that hide or don't have the information you're looking for. If you need specifications, CAD, or BIM, arcad.com is your search engine. Find and download the up-to-date data you need fast. arcad.com is free and requires no registration, so try Arcad today. That's arcat.com. And now a word from today's sponsor. A while ago, we began to hear reports of a company that was helping some of our clients build remote teams. We looked into it more closely and discovered the company World Teams that was helping small architectural practitioners build remote teams that were both capable and qualified. We were intrigued by another business that are addressing one of the critical pain points for small architectural practices, which is the ability to grow and shrink a team effectively, to be able to handle higher workflow without having to staff up significantly, and also being very sensitive about labor cost. World Teams is built to address these issues. World Teams is a small but mighty company that helps architectural practices build high-performing remote teams quickly and efficiently, saving you the headache of sorting resumes and interviewing underqualified candidates. World Teams operates in your time zone and prioritizes near-native English speakers, ensuring clear and efficient communication with your remote team members. They have flexible contracts so you can adjust your team size as your needs evolve. Additionally, you're connected directly with your skilled professionals, which fosters trust and collaboration, and World Teams helps you reduce your operating cost without compromising the quality that's so important to a practice. To download a free guide for building a remote team for a small architectural practice, go to businessofarchitecture.com/World Teams. That's one word, businessofarchitecture.com/World Teams. As a reminder, sponsorship is not an endorsement, and you must do your own due diligence before entering into any business relationship. Go to businessofarchitecture.com/World Teams.
So tune in now to hear how Mike helps firm owners gain financial clarity and confidence. Mike, what an absolute privilege and a pleasure to have you finally on the Business of Architecture podcast. How are you?
I am excellent, Ryan. I am so excited that you invited me on, and I've been looking forward to this for a while now. So thanks for inviting me. I appreciate it.
My pleasure, my pleasure. So you are the principal of finance here at Business of Architecture, a fractional CFO in many ways. The kind of role that you play here, you work very intimately with many of our clients, helping them focus on financial strategy, educating them, giving them actionable insights, and really being a trusted advisor and giving a very valuable financial perspective on what's happening in their businesses, helping them maintain profitability on individual projects and as a whole, as well as a whole other slew of fascinating financial accounting-based services, always with some inventive, thoughtful spreadsheet, which gives you a very unique insight into the kind of pains and problems that many of our clients here at Business of Architecture face when it comes to their money, basically, and it's very, very interesting to sort of see how architects, on the whole, behave around finance. But we'll take a step back, and perhaps we'll we'll start. We'll just get a little bit of perspective on your role here at Business of Architecture, how you would describe it, and what were you doing before? What was your journey to becoming this fractional CFO?
Yeah, absolutely, Ryan. So I do appreciate the introduction. You've captured a lot of what I do, and it's a wonderful experience to work with architects. They are amazing, amazing individuals, and I enjoy my job quite a bit working here with all of them. So it's a wonderful, wonderful role that I get to play and be part of their lives and their businesses that they're building. And I truly enjoy it. It's a fun experience. So my background is accounting, right? So I'm a CPA licensed here in the U.S. Worked with Ernst & Young and some international clients, some big, Fortune 500 clients, and would help their high-level people, their key roles, travel around the world, set them up so that they avoid, as much tax as possible, as legally as possible, obviously. But I'd wanted to take that role and that experience and bring that high level of accounting to architects. I love architecture as a hobby and as a personal enjoyment. And so I've been able to combine my knowledge with my interests here in the business of architecture. So I help, over a dozen architects currently with their books and transactions, and more than that, on more of a consulting basis to help them make those decisions so that they can move forward without having to spend the time in the books doing something that you don't have time for, and something that most cases they're not interested in, but they do want it to be correct. That's their main goal, is that it's something that they can rely on. They can trust those numbers and make good financial decisions based on the information that I'm putting in front of them, and knowing that it's correct. So that's my role. I'd like to fit between the books and the architects so that they're not having to spend the time and energy trying to figure it out and wrestle with it when they can be, doing the more important things, which is designing and building, right? So that's where I like to sit, so that I'm more of a support role for them in those business decisions that they need to make.
When you're working with architecture firms, what do you see as the biggest sort of difference between the challenges that architecture firms have versus the kind of corporate clients that you were working with previously? What is it the same sorts of struggles, but just sort of manifest in a different way, or are they actually quite different and there's quite a different attitude towards finance in the different industries?
It depends on the level of business that we're working with. Some of the smaller architect firms, they get so caught up in the books and getting them done correctly that they're just spending all their time within the books. Because architects they're very detail oriented with getting things right, obviously, and they want the same thing out of their books. They want to make sure they get it right and get it correct. And they don't realize how much time they're spending on it. Architects are very interested in getting things, to a point where they can see it in their mind's eye and then build that forward. And I can appreciate that, in the role that they have. But architects didn't become accountants. They didn't go to school to become accountants, and so they take a much more of an interest in it than I would say some other firms. But the some of the real problems that they come across is that they just don't see the time that they're spending on it, whereas other firms, they don't like to look at it at all. They like to ignore it completely, and they don't want to know about it, and so their books get behind. They don't know what's going on. They don't know where they are financially, and not to say that doesn't happen with architects. But architects they're very interested in it and getting it right from the very beginning. So I would say most of the time the books they're pretty well organized, but they don't have, like I said, they get lost in the time that it takes to get it correct. So that would be the main difference I would see in it.
So that's quite interesting, because over the years we've seen a number of architects who are very protective with who they allow to see and handle their finances. And I imagine this is not just unique to architects,
Right.
but we see the formation of architecture firms where somebody, usually a guy, brings in his wife to be
Hmm.
the bookkeeper, and the wife often hasn't had any expertise in doing the books or finances, and her training is in somewhere completely different. But there's a trust about it. Even just recently, I was speaking to one of our clients, and um, the wife had been doing, she was an office manager role in the firm for the last 30 years. Absolutely brilliant job. They worked amazingly well together as a team, looking to, transition out, replace her. And the first thing that came up was somebody else's wife, and with some of the new partners, his wife. And I had to sort of interject and say, hold on a minute. I'm sure she's fantastic. Does she have the proper skills that you actually need? And is there a fear here about the kind of, about trusting somebody to actually look at your numbers? Have you experienced this or seen this, and could you speak about that at all?
Yeah, absolutely. I'm smiling because I know exactly I know exactly who the type of architect's wife that you're talking about, or spouse. That is exactly right. There is a trust involved in there. And so one of my first things that I do when I'm talking to architects and I'm trying to help them is to build that trust so that they know that, okay, I'm talking to a real, an actual CPA, a licensed CPA who is putting their own reputation on the line, right? Because most bookkeepers that are found online, there's not any kind of background check. They're not licensed. They're just a bookkeeper by trade, but not by, they didn't go to school for it, and get fully certified for it, which is nothing to say that they do anything wrong. But what I have, which puts me separate from other bookkeepers, is my license. That's one key thing that I've stood my ground on, and I hold it, dear to my heart, because I do want to make sure that everything is done correctly. And building that trust is the first thing that I do so that they can open their records so that I can take a look at them and help them out. But you're absolutely right. It could be a staff member, like an office admin. They typically get put in charge of it. And unfortunately, there are some bad apples out there where some crimes of opportunity come up where, the staff member gets behind on a couple bills and needs to borrow some money. I do see that, that's a couple firms that I've worked with. We've dug out from underneath that and, taken care of things. But that's not to say that happens frequently, but it is something that's prevalent enough that we need to make sure that we keep track of that and take care of it in the right way.
So, in what does and we can break this down into kind of smaller firms and larger firms, and let's start with the smaller firms who are, uh, you know, they need some kind of financial organization behind the scenes, and they run the risk of, if they get too involved in it, they apply their architect brain into it, they might be quite good at solving a lot of the issues. It's going to suck time out of their other core activities. But what do they actually need to be doing, and what happens if they don't have these sorts of things in place?
Yeah, that's a great question. The first thing is time tracking. That's the one area that I like to look at first within the firm owner's schedule. It's very hard to do for most architects because they're so busy, right? I mean, they don't have
Right.
time to keep track of their own time because they're jumping from project to project. But what that does is it avoids the whole tracking of where am I spending my time, so that then you can make future decisions on planning, right? So if you have a feasibility study and you don't track how much time you're spending on each one, you have no idea what to plan for in the future. And maybe you're billing, too little. In most cases, it's too little. That's what I've seen with a lot of them when we actually look at the numbers, and there's this eye-opening aha moment saying, "Oh my God, I can't believe I've been, eating my time on this." And in some cases, it's fine. There's a little bit of advertising and marketing built into that where you want to say, well, I'd like to get the job. I'm going to eat a little bit of cost ahead of time. But then, you go into design or schematic design, and then you don't know how much time you're putting into that either. So that's my first thing I look at and try to encourage, is setting up a simple time tracking process. It can be on an app, it can be on, using Monograph or a QuickBooks, using some kind of a system where you're just getting it in there so that you know where all your time is going. And then from there, you have some firms, they're just using Excel for their accounting records and, how they're keeping track of their bank statements and just seeing, okay, well, my, income in versus expenses out, and that's what my profit is. What I like to do and what I like to start with firm owners like that is break down those numbers so that they're not just looking at the bottom line. They're looking at their company as a whole and looking at the health of it. Because once you get a good picture going backwards and looking at the firm, you can then plan and you can look at trends. Because I see a lot of firm owners, they're just spinning their wheels for, a minimal to zero profit on things where, sure, they could be growing, things could be looking better throughout the year. But then when we look at forecasting and we see what the fees schedule looks like, their profits are just so low. And so it's something that gives them a little bit of a picture ahead of time that they don't spend the time on figuring out ahead of time or figuring out and going back. And that's where I like to look forward to the future with the types of work that they're doing so that then they can make decisions going forward with that. So that's what I like to start with, is breaking down the numbers and bringing it forward.
It's really interesting. You bring up like time tracking as being the kind of core element to this. Obviously, this is a resonant refrain that we have here at Business of Architecture, of like being able to keep tracking of your time, so that you can, better data leads to better fees. You can make better predictions. You can speculate. You can start to forecast. You can make decisions. But most firms are not doing it, and I chuckle sometimes on the podcast over the years. I've interviewed project architects or firm owners about how they keep projects profitable, and often they'll say you can't. It's not possible. And then we might lead into a conversation about time tracking, and they're like, well, we tried that once, it doesn't work. So can you keep projects profitable in an architecture firm? And if so, how? What do you need to be doing?
Absolutely. That's the key. One of the key factors that I look at first with firms is being able to track that time so that you can see how much time you're spending on it by, individual, and looking at what the staff cost is. The consultant costs are pretty easy to track. That's easy. Most firms are already doing that. But the time is really where they fall off, and that's where things can help to set up things so that they can go in and figure out how much time is going into it. And then the profitability is baking that idea of, let's look at our profit first. What's our goal profit? Is it going to be 30% on this project? How does that work? How do we factor that in? And I love the Business of Architecture system because we have tools that are in place that that you guys as coaches will put forward to them to use, and then I get to come in and you actually go do the implementation of them. So we're taking the training from Business of Architecture and then using real world factors and numbers so that we can move forward with figuring out what that profit would look like, so that then they can actually, like you're getting to, is not just spend your time and throughout the year and not have anything to show for it at the end.
Do you have like a set of benchmarks that you'd be advising firms to be striving towards in terms of their profitability? Like what would be realistic profit margins that different firms should be aiming for?
Yeah, I like the 20 to 30% profit. That's where I aim
Mhm.
at first.
Yeah.
And the benchmarking key factors of that is going to be looking at your utilization as a firm, which is, the total amount of hours that your staff is using versus what their billable hours are. And that comes up with your utilization rate. And that's usually typically lower for owners, but your staff, you want it to get it above 80, 85, even 90% in some cases. So utilization is great. The second one is going to be realization, and that's going to be a number where you're looking at the total of time that you spend per month in billable fees versus how much you've actually invoiced for. We like to see all of our owners over 100%, and that just shows that you're not leaving any billable fees on the table. But, going back to that time tracking, you don't know what that number is unless you're tracking the time. And you don't know how much time you're spending on it. And that's where, I see some eye-opening moments and that's why we call it a benchmarking number, is because you want it to be tracking it, because what doesn't get tracked doesn't get fixed. And so that the realization rate is a good key number. Plus we look at our benchmarking number with the BOA number. It's a great number looking at what the total fees are per individual, your net real revenue. I don't want to get too deep into the factors of calculating it, but looking at what your revenue per employee is going to look at being, and getting that above the $250,000 per year mark. That's a great key indicator of how a firm is producing, and if they need to hire people. I have firm owners that are getting into the 350 to 400K, even 500K per employee, which is great. But you're spending a lot of time and effort to build that in. And then one of the other benchmarking numbers is looking at expenses, average expenses over a 6-month period, looking at what that average is. That's a key. It's one most architects don't like looking at. That's something they try to avoid. And so I bring it up just as a trend line so that they can see, okay, how are we looking overall? And then what's the story there? Do they know that it's going up, or do they realize it's going down for some odd reason, or, for something that can be explained, new staff, lost staff, things like that. But just understanding what that number is, that break-even average, so that you can at least know what you need to, as a firm, you need to be billing on a monthly basis to help cover the bills and keep things going, which a lot of firms don't know that number. That a lot of them couldn't say, they don't know what that is on a month-to-month basis.
I really like how you're kind of describing this, because you're talking more about relationships and trends between numbers. And one mistake I've had myself when running a firm is that it's easy to get into too much minutiae and detail, and you're trying to be accurate with everything. And now you've just got a whole load of data, and it can become very overwhelming, and you're trying to understand each little piece. But then you don't have the ability, this kind of CFO ability, to step back and look and actually recognize what the trends and relationships are, and how those trends and relationships should be being used to direct action and direct kind of course changes and business planning. And, do we need to be going out there and doubling down on our sales and marketing effort? How do you help pull clients out of the kind of minutiae and keep them at that kind of more strategic level?
It's talking to them directly. It's avoiding them filling in the numbers and getting into the spreadsheets. It's taking that away from them and allowing me to take over that area, so that they don't have to spend the time on it and get into the real root details of it. Some of them I'm still wrestling that away from them a little bit, so that they can, learn to let go of it, and then look at it as a high level aspect, and using those key indicators. What's really nice is being able to model for them and build dashboards that we create, customize for them directly, so that they see on a month-to-month basis where things are going and where they're headed. And in some cases, the most recent one is looking at new hires. A lot of firms come to me and they say, I don't know if we have enough money to hire anybody. How do we allocate this? Because yeah, sure, they're gonna earn us new fees. They're gonna build that income going forward, but can we afford it on the bottom end? And the tool that I use for that is a staff profitability calculator, looking at the variable costs that are associated with a new hire, looking at their payroll taxes. Sometimes there's new technology fees and involved. But then on the top end, looking at what their billable potential is, even at different ranges of utilization. So we build in, a lower level at the beginning when they're newly hired, and then building that out month by month and saying, okay, well, trajectory wise, this is what we've seen in the past. Now that we know what our utilization numbers are for new staff, we can go back and look at what that range is and build a model going forward and say, yeah, this person is going to be profitable, within the first month. Their multiplier is so high that they're going to be a great asset, and, knowing that there's going to be a little bit of training involved. But in most cases, it's always a positive impact, seeing, or, that they're able to see it and quantify it and be able to plan for that. So that's been a new tool that I've used that's gotten a lot of good feedback and allowed people to move forward confidently, knowing that they're going to be able to recoup their fees very quickly with that new hire, that they didn't think, oh man, this is scary. I don't know if I'm going to be able to pay this person.
Yeah, that's often, quite a hurdle. People know that they need to, they can be looking at their hours. Even if they're not looking at their hours, they'll probably have the experience of I'm spending too much time on the details here. I should be out winning work. Um, let's go and hire somebody. And then, certainly if they're one of our clients, we're kind of encouraging certainly the smaller firms to be hiring more senior people first, having more experience because it's going to be able to pay off. But then you always have this little kind of pit to go into where things might get a little bit worse first, or there's going to be, how long do we have before this employee is actually going to start generating a profit for us? Um, and actually being able to have a tool and a system to be able to be strategic over that, and kind of dispel any sort of uncertainty around it is very powerful.
Yep, exactly. And it gives them the confidence, to move forward and be able to and grow their firm the way they want to. So it's great. I think it's a great asset to them. And seeing where they could be is powerful to them to be able to move forward with that. So yeah, I agree.
Let's talk about invoicing because I know it's a shared passion of both you and I. One of the most important aspects of a firm is making sure that there is a kind of predictable cash flow cadence that's coming in, so that we can be able to prepare and see what's happening in the future and make these decisions. All too often, we'll see firms that are kind of going through the feast or famine cycles. And then when we get into it, we start seeing all sorts of poor practice things that have just either happened or difficult working with challenging clients and they're not paying on time. Or, the worst is when architects haven't invoiced because they're too busy. Like that one's really, it's a completely unnecessary thing to be dealing with. But then we do have challenging clients where, let's say, working with developers, they haven't got their money come in yet, and you haven't set up a kind of a way of making sure that you're getting paid up front, and then now you're being leveraged by the developer because they haven't been paid, so you're not going to get paid, and now there's a scramble, and it just makes everything very, very stressful. What have you seen works really well? What kinds of sorts of things do you help clients put in place around just establishing that lovely heartbeat of cash in the business?
Yeah, that's a great point to make because it is a painful experience that a lot of firm owners go through, having to go through the billing process. The main thing that I see is folks that are having, their invoicing is throughout the month, that's spread out, it's erratic. So the first thing I do is I come in and I say, let's bill on each, the first of each month. That's the main key that I import on all of them because it allows not only for the cash to come in on a monthly basis. And I've seen the clients appreciate that as well. They know that that bill is coming on the first of the month, and they know, roughly, hopefully, how much it's going to be. And so creating that expectation and that awareness and knowing that it's going to be happening at the first of each month, it aligns both parties because then the client can budget for it and the architect can rely on those fees coming in. And so setting up a positive relationship with that is the key to making sure that everybody gets billed paid on time. But you're right. You have developers that they sit on it. They basically are loaning them the money and the cash in the form of time, and so it's an active moment where I come in, look at their accounts pay or accounts receivable, and take a hard look with each one of them and have them explain to me like why isn't this one getting paid? Why is it 90 days over? Because they think, oh, it's 30 days, it's 60 days. As soon as it gets to that 90-day period, the likelihood of ever even receiving it goes down dramatically. That's where you have difficult discussions, difficult conversations with them, and you look at stoppage of work. But most architects, they do have an empathetic heart to the projects that they're working on because they want to see them completed on time. They don't want to see the client stuck out, for, whatever reason because they're just not getting paid for it. And they have, their client could have experienced trouble on their end. And so that's where, I've seen some of the firms coming in and doing the pre-billing. They have a much larger retainer than what typically is I've seen in the past. But then also setting up monthly subscription billing so that, again, you're aligning the client's budget with yours and knowing that everything's going to be, cut up within, each phase into an amount that they can expect and to be billed on a monthly basis. And so moving that needle forward as much as possible and that timeline ahead of time instead of catching up after the work has been done later, that's what I highly encourage. And then there's other techniques too. We've looked at separating some of the email chains that are going out. Some firm owners don't like chasing down the clients directly. And so using me or other staff within the firm to collect on it or just to keep bugging them about it and doing it regularly, calling them on the phone, getting in front of them, asking them, being a little bit dogged about it and getting after them. Those are the types of keys that I focus on and present to them. And then each client, they're all different, right? So you're not going to get a one method fits all with everybody you're working with. So it's a case by case basis, but I like to put a little pressure on the architect to be able to go after it a little bit more aggressively because it's their, in the end, it's their money. They've earned it. And there's a contract involved. And so I like to push on them a little bit more than they would like.
I like it. Good. In terms of, like, let's say you're working with a firm and they have got a kind of cash flow crunch happening. Maybe they've just lost, some projects that they were very certain were going to continue on. Those projects have suddenly gone on hold. We've seen this happen, a number of times over the last few years, certainly more in the last sort of 6-7 months, where things have been, there's a lot more uncertainty, let's call it, just in global affairs and what's happening, and that's making certain investors just hesitant, and projects which were once certain now go on pause indefinitely, and in some cases, that can be quite it can be quite extreme if there's a whole load of them that happen all simultaneously. What do you suggest a firm does in terms of dealing with that kind of cash flow crunch? What sorts of things really will be like a life raft for them, and what actions should they be taking?
Yeah. So the main answer to that is hard because by the time they're asking the question, it's a little too late. And so I like to set up things during those really good months. And so setting up reserves so that we cover payroll, 3 months in advance. That's my main help assistance with some firms that are going up and down like that. They don't have a good trajectory. They don't have a good pipeline, looking at their outstanding contract value, looking at all the indicators and the key benchmarking numbers like you're talking about before is setting up and looking ahead and seeing what's coming, right? Looking ahead 13 weeks and coming up with a cash flow process that's going to cover them. And if it's not, that's when we start planning for that. And so a lot of the firm owners who say, well, I got a cash crunch, is like, well, we can do things about that. There are processes and there's things that we can set up ahead of time. And that's what I encourage when things are going really well and looking and setting up payroll. Payroll is the main thing. That's the one that creates the most amount of pressure on the firm owner because they feel responsible for their employees. And in some cases, they do need to put them on a part-time basis for a short amount of time. I've seen that work and having that difficult conversation with the staff to say, look, I don't want to let you go, but right now things are tight. So that's one, it's difficult, but it is a variable cost that can be brought down pretty quickly. With other areas, I mean, there's the SBA loans that are available to firm owners. And again, it's one of those areas where we want to set that up ahead of time and set up that line of credit with the bank and set up that relationship with your local bank so that when times like that come, that's not the time to be asking for money from the bank. They're not going to be appreciative of it. They're going to look at your books and see the same thing. But if you can get to the bank and get ahead of the schedule of, oh, I'm going to need it in the future, set it up so that, you're not getting charged anything on that line of credit ahead of time. But the key element there is setting up that local relationship, bring them your business and set up loans with them, have your money in that account and have somebody you can talk to and ask for. And most of the time firms look at, they're using Chase or they're using Bank of America, they're using these big banks. But in some cases, it helps to have, if you're a local small office, to have a local bank. Not a credit union sometimes with businesses. I don't like setting that up, but I do like having an established bank that you can have that relationship with so that it's there when you need it. And they trust you and they know when things are coming, looking the way they are for you when the cash gets a little bit crunched. But setting up your firm so that you have a strong pipeline, you have calls that you've made out there. You've gone from bringing it from like an abundance and just looking at like check-ins and coffee with folks and bringing that into real contract terms and figuring out what that likelihood of earning that project would look like. Because numbers like that, when you're looking at getting loans, the bank loan officers are going to be needing that. And so when you do get caught, you're going to need something to show them, the project's likelihood of earning things that can save a firm and getting a good loan and getting your terms on it as well.
Right. So we've mentioned earlier as well that there's been a lot of sort of changes happening. Have you seen how the rising costs of putting together buildings like labor, materials has changed the way that firms need to kind of plan and project their fees and for their projects? Has there been much alterations around this?
That piece of it, there's the negotiating with the prices ahead of time. That's where I see a lot of the firm owners purchasing, items ahead of time, and getting, almost looking at like futures contracts for their purchase for their products and being able to say, look, we're going to work with this builder, but we're going to lock in these rates ahead of time. I don't deal with that directly, so it's difficult for me to say where that would be, but I do see that, again, having that relationship and having those discussions ahead of time does help. I have seen some firm owners or some clients of firms, the unknown, right? The element of, oh, I don't know where things are going to go, with tariffs and the rising costs of products. I have seen where it has helped, in some cases. A lot of firm owners are worried about like clients that are backing off a little bit. But having that discussion with them ahead of time saying, look, it is uncertain where prices are going to go. So now is more of a time to build than waiting until the prices go up. And so having that discussion on a positive note versus a sort of an unknown element and I encourage the architects to come forward with that discussion and be confident about it, of their skills and their ability, and say, look, if you come in now, then we can lock in these rates with our builders and the cost of those products ahead of time versus just waiting and seeing, which never seems to work out because prices always seem to go up, especially these days. So I like to encourage the architects to have those, be confident about what you're doing, so that you can get that access to those builders and get those rates that you want.
It's also a good strategy in terms of, when you've got projects in the pipeline and you've got clients who are hesitant about moving forward with a project, that actually being able to lay out a financial reasoning for why they should start the process now as opposed to later, because things only ever going to go are going to go up and increase, and being able to have a way of intelligently talking about that with a prospect, again, is very, very useful. In that, what would you say that you see as the sort of biggest mistakes that firms make when they're actually negotiating their fees and contracts? What sorts of things are there? You mentioned earlier that usually they're on the low side and that we should be aiming for 20% to 30% kind of profit margin. What mistakes are the firms actually making when they get involved in these contracts in the first place?
Well, it's not setting up barriers for time with staff. That's where I see the biggest issue is some of the some of the projects that they're working on, staff just eat through the time and they chew through it without seeing a direct link to what they're doing to their own firm. They are just filling in their timesheet, they're filling out their hours, they're doing the work without really, picking their head up and taking a look at things on the outside of where they're supposed to be. And so setting up either barriers or roadblocks, either mechanically, through the software and saying, each week, here's what your time allocation is, fit what you can into it. But then also encouraging that discussion with those staff members to see the time. A lot of firm owners, they try to hold that back so that they don't see exactly how much time that they've allocated to it. They try to keep the money and the numbers a little bit more hidden than what they would, they sometimes would trust some staff. But one thing I've seen is the empowerment of that staff and seeing how many hours are available to them and seeing what this project means for the firm. And then also, with one firm that I work with, they encourage a profit sharing method. And so it doesn't encourage time eating or time, not billing time for the project and cutting yourself short. But what it does is it aligns the staff with the firm and the client so that they can get it done efficiently and as quickly as possible, within the correct terms of the project. But it brings everybody together on the same page to say, okay, well, this is how much time we have. We're hoping to get it done by this date. Where are we going to sit with this? And then have a profit sharing method so that if you do get those goals and the firm does do well, so does the staff. The staff gets to get some of that equity back in the form of profit. So it all works together, and that's the main thing that I've seen. Where instead of penalizing staff for going overtime or spending too much time on those costs, is aligning everybody on the same team method in the process, so that it's not so siloed and so broken up. And oh, you did this, you got to do this time, and here's where you're at. It encourages more of an ownership to work together on getting projects done profitably.
Well, it starts to set up, each individual project like a little mini business in and of itself that can be managed. There's a profit and loss for each project. It's quite amazing that many practices still are very guarded with their finances, or even with the time, like how fees, like you're saying, how fees actually translate into hours for their staff to know. If the team doesn't know what those boundaries are, who knows what's going to happen? They're going to do what they're going to do. And
Hmm.
that's really on their leadership. And you're quite right. I mean, the amount of empowerment that comes when you give some clear goalposts to the team members and encourage them then to plan out, okay, you've got 100 hours to deliver all of these parts of the project here. We're going to be checking in every single week. How map out your time. That gives people 10 times more chance of being able to, get the project done on time than if they're just acting blindly, because then their motivations are totally different, right? There isn't there isn't an incentive, if you like, and there is no clarity around it.
Yeah, and there's good systems to put in place too. Like, the Monograph is one that I've seen a lot of firms use, BQE Core, where you're mapping out what the schedule looks like ahead of time for staff. And then they get that allocation within their timesheet so that they can see, okay, this is how much time I've got. And it just keeps things, more in balance using that system. But then it also gives the firm, when you have products like that, it gives the firm the ability to see what their profitability looks like going forward on a month-to-month basis. And I've seen a lot of good methods put in place using the Monograph system. And again, BQE Core is right there beside it. Just depends on what you like more. And being able to see and track that as a firm owner so that you can move forward with, staff hiring or new projects, or looking at projects that were not profitable and being able to learn from that. And making those harder decisions to not take that work going forward when that that's not where your efficiencies are.
hmm No, it's amazing the kind of level of very specific tools that are now available for architects. Monograph, again, we're big fans of that here at BOA. Visually, it's very simple to get up and running. One of the things I've seen with firms is that they often spend a long time agonizing over which software to use or which spreadsheets to use. They eventually decide on one, and then it never gets implemented. Like they might use it for time tracking, but they never actually finish it off and get project data into there. what would you say, like, how can architects avoid that happening? Because it's very frustrating when someone spent a long time deciding what product to use, and then, again, they run out of time. I haven't got time to set Monograph up properly.
Yeah, and that's exactly it. That's what I was saying. I've seen a lot with other firms when I say, "Well, what are you using?" They're like, "Well, we tried Monograph for a while, and then we just didn't never use it, so we just got rid of it." Because it's the implementation of it. It's the time that it takes to get those projects set up and then put in properly and track that time. And then also, carrying forward, looking at timesheets. It's having somebody in that middle area to be able to learn the system, who knows how to use it, and then be able to train the staff and the owners how to use that system and see where the numbers come through so that you can get a good understanding of it. Monograph and BQE Core, they're both are very good systems, but they're not as automated as what the firms sell them as. You do need to have somebody on staff or somebody like me to be able to come in and say, okay, here's how you added the numbers, here's how to make it all work, and really get into the weeds of making sure you understand how to use it, and then be able to ask questions of that person who knows what they're doing, so that you don't have to go and use like the chat box or go to these companies, because it's like the accounting system, like QuickBooks. The time you spend on trying to figure out QuickBooks and get it all right is great because you can get it all set up, but you've lost a lot of time involved in there. So I like to have somebody who's implementing it and trained on it and know what they're doing, so that you can get all those qualities out of it that is not directly the firm owner. That's where I like to have somebody like the bookkeeper come in and understand it, so that they can not spend that extra time involved in it.
What sorts of innovations are you seeing with the use of AI around the kind of just financial performance and management of a firm?
The recording of transactions within like QuickBooks Online has gotten so good. It takes the metadata from each transaction, and it all automatically is assigning categorization of those transactions, which is great. Um, but I also noticed that there are a lot of mistakes in it. The types of things that they're coming up with, it sounds great and it looks wonderful, and you click, yep, match, okay, this is great. But it's not quite there. It's working. It's a good tool, but it still makes sense to have somebody involved who knows what they're doing to get it right. In the long run. With like systems like Monograph, you can add a contract to it now, and the system will know it is looked at enough information where you can put the contract in there, and it will build the project automatically. It'll look and see what the fee schedule is. It'll look at what the hourly rates are, what roles are involved, and it'll pick out the team that matches those roles, and will make really good guesses as to what's involved and what the timelines are. The more you put in the contract, the more Monograph will be able to pull out of it. So those are wonderful tools. The time tracking, mileage, anything that involves keeping track of things. That's where I've seen a lot of innovation that helps architects not take over their job, or the accountants, but just helps as tools to make them much more efficient, I'd say.
Love it. Um, I'd like to ask you some personal questions, Mike.
Oh boy.
Tell us a little bit about one of the previous your own entrepreneurial endeavors. I know, and that this is one of the things why we love having you on the team here as part of part of our core, is that you've had your own ventures. Are you able to give us a little bit of an anecdote of your own forays into entrepreneurship?
Yeah, of course. I love talking about it. It's like asking an architect about what their latest project is. Yeah, after accounting, within accounting, it's very dry. It's very basic. It does not create a lot of or bring up a lot of the creativity that I have, and so, or it doesn't bring it out. And I've always loved building things. As a kid growing up, I've always liked creating and building things. It starts as early as like Legos. And so when I had more time available to me, I was able to look at types of things where people were interested in, bags and cases and things to be able to carry and bridge the gap between analog and digital tools. I grew up, before the technology boom, and now I'm in the middle of it. And so there's a lot of people who appreciate having analog tools like pens, things like that with them. So I created a case that bridged that gap. It allowed people to bring notebooks and iPads efficiently. And so started Kickstarters with that. And so I raised, over a month, almost $15,000 within the first month to build that product, and bring it to market and show it to, have other people that enjoyed that same element of, a good carry option for them. But over time, from a business standpoint, I noticed that while it was great and I had a good following to that would like it, the competition, on Amazon and the types of things that I wanted to build into the product, using sustainable materials, recycled plastic, where they would weave the plastic, used bottles into a fabric called Reprieve. That just became too costly. So the competition that I had, where I was trying to make it sustainably, not go to an abroad company where they were, just not ethically or morally aligned with what I was interested in. And plus the economic costs of, making a product like that as a small builder or small maker just were not there. And I just, I couldn't quantify it or justify making those decisions to make it profitable. And it would kind of cut into my own personal beliefs of making something in the world and just, you know, coming down from there. So that's when I closed up shop, and it just didn't work out, but I learned a lot from it and got to have a good experience in building and design and finding out just how hard it is to make something.
I think that's, the kind of level of, product design and actually bringing actual item to market and selling it is one of the most, that's the sort of pure entrepreneurship, if you like, and very challenging, but again, filled with so much wisdom and business experience that just enriches what it is that you do. If you weren't a CFO, what do you think you would be doing instead?
If I weren't a CFO, I would love to be a professional Tour de France bike rider. That's where I would have focused all my energy. I
Really?
love I love the Tour de France. It's so interesting. Aside from all the chaos of doping, all the things that are involved in that, the bike riding
Yeah.
is it's such a fun environment. And I used to run marathons and thought that was the best thing for exercise. And now that I'm on the bike, I'm like, why was I ever running? It's so much easier to bike. I've got my water with me. I can take breaks. So it's been a fun transition to be getting into
Cycling,
that.
they say, is the new golf
Yeah.
in
Oh
terms
yeah.
of in terms of networking and activities. A lot of architects, big cyclists. Brilliant.
Yeah, that's true. I would love to do that with anybody. So
Wonderful. Well, Mike, I think that's the perfect place for us to conclude our conversation today. Absolute pleasure having you on the show and being able to pick your brains and you sharing so generously with us the sorts of things that you help our clients here at BOA resolve, and the benefits of working with a fractional CFO like yourself, and how important it is really to get a real handle on the financial mechanisms inside of your firm. Because as you were saying, it frees you up to do the stuff that you're supposed to be doing as an architect, and for you to make those powerful decisions about where you're going in your business. So Mike, thank you very much.
appreciate it, Ryan. Thank you so much for having me. It's been fun.
Scope creep thrives in firms without clear systems, turning every change into confusion, conflict, or compromise. When your staff sees you bending the rules after telling them to hold the line, everyone loses. The Scope Creep First Aid Kit helps you align your team with firm-wide standards and gives them the tools to say no without the awkwardness. Get this smart practice tool 100% free by going to businessofarchitecture.com/creep. And thank you to our recent listeners who left reviews for the podcast on iTunes. Your reviews help others find this podcast, so the rising tide raises all boats. To be acknowledged on the show, open up the podcast app on your iPhone, search for Business of Architecture, and after clicking on the show, scroll all the way to the bottom and leave a review.
And now a word from today's sponsor. Can't find the product data you're looking for? You might be using the wrong search engine. Broad searches result in consumer products, out-of-date information, and websites that hide or don't have the information you're looking for. If you need specifications, CAD, or BIM, arcad.com is your search engine. Find and download the up-to-date data you need fast. arcad.com is free and requires no registration, so try Arcad today. That's ARCAT.com. And now a word from today's sponsor. A while ago, we began to hear reports of a company that was helping some of our clients build remote teams. We looked into it more closely and discovered the company World Teams that was helping small architectural practitioners build remote teams that were both capable and qualified. We were intrigued by another business that are addressing one of the critical pain points for small architectural practices, which is the ability to grow and shrink a team effectively, to be able to handle higher workflow without having to staff up significantly, and also being very sensitive about labor cost. World Teams is built to address these issues. World Teams is a small but mighty company that helps architectural practices build high-performing remote teams quickly and efficiently, saving you the headache of sorting resumes and interviewing underqualified candidates. World Teams operates in your time zone and prioritizes near-native English speakers, ensuring clear and efficient communication with your remote team members. They have flexible contracts so you can adjust your team size as your needs evolve. Additionally, you're connected directly with your skilled professionals, which fosters trust and collaboration, and World Teams helps you reduce your operating cost without compromising the quality that's so important to a practice. To download a free guide for building a remote team for a small architectural practice, go to businessofarchitecture.com/World Teams. That's one word, businessofarchitecture.com/World Teams. As a reminder, sponsorship is not an endorsement, and you must do your own due diligence before entering into any business relationship. Go to businessofarchitecture.com/World Teams.
Today's episode of the Business of Architecture show is sponsored by Smart Practice TM, the world's leading step-by-step solution for small architectural practice owners that want to structure their existing practice so the complexity of business doesn't get in the way of the architecture. Because, you see, it likely isn't your architecture skills that hold you back. It's the business aspects of running a practice, managing projects and people, dealing with clients, contractors, and money. So if you're ready to quit being a glorified administrator and get back to architecture again, go to smartpracticemethod.com to discover the proven, simple, and easy to implement smart practice method that is revolutionizing firm management for owners and teams. Hey, Rion Willard here, and I want to thank you for joining us today and remind you that the views expressed on this show by our guests do not represent those of the host, and we make no representation, promise, guarantee, pledge, warranty, contract, bond, or commitment except to help you conquer the world. Carpe diem.